Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Thursday, August 6, 2009. We begin in the UK, where the Bank of England announced that it was holding rates steady but was going to expand its quantitative easing program. That caught market watchers slightly off guard as recent incoming data showed the UK economy beginning to emerge from its recession, with manufacturing and service PMIs showing expansion and housing prices rising. Expectations were for a comment on perhaps winding down the program instead of adding £50 billion to it. Following the release, the pound was sold off against the dollar, with the pound-dollar pair relinquishing its gains made earlier in the week. From an area around 1.70 prior to the announcement, the pair fell 230 pips, finding support near 1.67. The ECB concluded its meeting as well, keeping rates at 1%, with ECB President Trichet saying that the rate was appropriate and that policymakers were satisfied with their asset purchase program. The tone of the president's press conference was more upbeat than last month, indicating that the economy may recover sooner than previously expected. The greenback strengthened today against the euro despite Trichet's comments, as the euro-dollar pair retraced part of its earlier rally following two sessions of sideways action. The decline came mainly during the New York session as U.S. stocks were weaker and the news from the Bank of England boosted the prospects of the greenback. The euro-pound pair surged following the Bank of England news as well, rallying about 100 pips to the 0.8560 level, the highest level for this week. Today's high runs up against a point of old support that was cracked last week as favorable incoming news from the UK had been strengthening the pound. The dollar-yen rose overnight, breaking above its resistance level for the week near 95.50. Then the pair ran up against the trend line representing resistance, which capped the greenback's gains. The pair retreated back to its old resistance level. As we mentioned, stocks in the U.S. were weaker as telecom, healthcare, and energy stocks fell, though financials helped to mitigate overall declines. Fundamental news from the U.S., however, was better than expected. The number of new U.S. jobless claims fell by 38,000 in the week ending August 1st, a figure that surprised forecasts and showed that the pace of job cuts may be easing. It's not slowing fast enough to keep the unemployment rate from rising, however, and that rate is set to climb in tomorrow's nonfarm payroll report. Even though new claims fell, the number of total people continuing to collect benefits rose to 6.31 million after 3 weeks in which total claims had receded. On the positive side, it has now been 5 weeks in a row that new claims have remained below the 600,000 level. In other employment news, New Zealand saw its unemployment rate jump from 5% in the first quarter to 6% in the second quarter, a figure that was worse than expected. Employment declined 0.4% following a 1.3% decline in the first quarter. The New Zealand dollar-US dollar pair slid against the Kiwi, though the Aussie was down as well against the greenback, as the theme of greenback strength in today's trading was dominant. The pair had rallied about 270 pips the past 5 sessions, and the retraction so far has reached the 23.6% Fibonacci level. Tomorrow, the U.S. will be reporting its July non-farm payroll report, which could be attributing to traders trying to square their positions prior to that important release. In Australia, the employment news there was the opposite of New Zealand's, as the economy in Australia added 32,200 jobs, a number that beat forecasts of an 18,000 decline. The unemployment rate remained also at 5.8%. The Australian economy was able to avoid a recession as the central bank acted aggressively to cut interest rates, while the government provided stimulus funds. The Aussie extended its sideways trading against the yen today, with today's high moving to the 80.80 level before sliding back into the range established since Tuesday. Trading this week has fallen into a consolidation pattern, with the recent support level at the 38.2% retracement level of the 5-session rally from July 29th to August 4th. Tonight, Australia releases its construction PMI and the RBA quarterly statement. Overnight, Switzerland releases its unemployment rate for July, while Germany posts data on trade and industrial production. Tomorrow, the U.S. will unveil its non-farm employment change and unemployment rate, and Canada will also be posting its employment figures for July. And that's it for today's broadcast. Thank you for watching us here at CMSFX.com, and join us tomorrow as we break down the movements following the non-farm payroll release. Good night and happy trading.